Hello and welcome to Crux Investor. We spoke earlier today to Mike Hodgson, CEO of Serabi Gold. They're a gold producer with assets in Brazil. And if you want our thoughts and opinions on that conversation, and indeed the company itself, you can find that at cruxinvestor.com/club. You can also find detailed company reports, market commentary from experts from around the world on a variety of commodities. There's also training videos on there. There's summaries of other interviews that we've done. And there's a big thriving community of investors sharing their thoughts and ideas with each other. And if you go there now and sign up for the waitlist, you get a 7-day free trial. And of course, we'd love your thoughts and opinions too. So do leave a comment below, give us a like. And if you want to see what we talked about, take a look in the description. Mike, how are you doing, sir?
Very well, thank you. And yourself?
Yeah, not too bad. But I haven't been to Brazil like you have. So how are things over there?
Well, pretty good, actually. I was obviously a bit apprehensive about the trip, but we've had a team over there now, a few guys, and got to site. And it was obviously not having been there for such a long time. Any of us, it was we were reliant on sort of information from our management, etc. Yeah. We have regular meetings, but you can't beat seeing it with your own eyes. So getting out there and, a lot of positives. Obviously, like everyone, we've obviously had our issues with the whole pandemic for the last sort of 6 or 8 months. But, it was pleasing on the eye, good to get there. The country itself, I think, seems to be coping really well. There's a lot of stuff in the press which I think is a bit unfair. You don't certainly see it. And dare I say, I think the UK could learn quite a lot about the way Brazil's dealing with this crisis.
Oh, don't. Let's not talk about the UK's response to COVID. That'll be another hour here. But look, I did want to. I called you up because I saw the press release this morning. Obviously, it's kind of a mixed bag, it seems to me. And I think, I'm wondering how the market will react. I mean, what's your take on it? For instance, the first number I saw there was, production isn't quite what you thought it would be.
Well, I think, at the end of the day, we thought Q3 might be a bit like Q2. And I said, as I've written in the press release, the reality is the pandemic probably had sort of it had bigger teeth in Q3 than it did in Q2 in Brazil. And that was probably good for us because it allowed us in Q2 to really prepare ourselves a little better for Q3. I think if we hadn't, we could have had a really tough time in Q3. And I don't think the result in Q3 is that bad at all. All right, we thought we might be able to achieve more than 8,000 ounces. We didn't quite get there. But at the end of the day, pretty credible result, I think. And, I'd like to think that, people, investors, will be pleased the way we've gone about this. We've managed to keep operations fairly normal. And we'll all remember that going into 2020, we were really positioning the company to really take advantage of our resource and reserve, etc. We installed the ore sorter. We'd started drilling to really grow the resource because the plan always was to really build up the mining rate and actually have a much greater mining rate than plant rate. And the idea was we were going to overmine, produce a nice big stockpile and feed that ore sorter to make sure the best 500 tons per day in our plant constrained operation would be the result. Unfortunately, the pandemic came along. No one could see that. We had to suspend drilling, but we kept going. And the fact that we actually did position the company did mean that we actually have been able to maintain a decent level of production out of the mine. Not as much as we wanted, but a decent level of production through the mine. And I'll say this, the plant has never run out of ore. That plant has never run out of ore. We've got pretty close, but we are in a situation now where we are pretty much producing out the mine what the plant can take. So we've lost that facility to cherry pick the grades. We always overmined, had more mine capacity than plant capacity, which allowed us to high grade, pass them through the ore sorter and feed the plant with a better grade. We've lost that. Why have we lost it? Well, during the pandemic, we had to reduce numbers. We had to reduce all the non-core stuff. It did have an impact in the mine. We had to simplify the mine. Instead of having, say, 8 multiple faces going at any point in time, we had to simplify and reduce it to a low operation, which meant we became a little bit of a hand-to-mouth type operation, and inevitably the grade suffered. But, we've maintained a grade of 5 grams, okay? I know it's not 7 or 8 grams like we've had historically, But the 5 grams still makes money. Our cut-off grade's 2.5, and whilst it's not making the ounces that we would have liked, it's still made decent ounces.
Explain that to me, Mike. Do you mind if I just ask you a question there? Because I get the fact that planning from 2019 meant that the impact of COVID, which is unforeseen for everyone, wasn't as impactful as it could have been. I get that. But why is the grade drop from the sort of 7s and 8s down to 5?
Right. Well, basically, what we have normally done historically with any vein mine, it doesn't matter what deposit you're working on, there's great variability and great erraticness in the resource and in the reserve. You never will know, like an open pit mine, know exactly what your tons and grade are going to be for the next 5 years. In a vein mine, you are almost on a day-to-day basis. You will get surprises, good ones, bad ones. That's the way it goes. So the way you insulate yourself from all of that is you actually have more faces available at any point in time to make sure, okay, when this face goes bad, you've got another one over there that's okay, and vice versa. You've always got this flexibility, I like to call it optionality, as you're on your day-to-day mining. So our strategy has always been, and with the ore sorter, we ramped up our strategy, was to actually produce out of the mine something like 750 tons per day of ore. And out of that 750 tons per day, we would find 500 tons per day at a higher grade. We would essentially eliminate low grade and waste out of the lowest 250 tons per day will be set to one side and stockpiled, and we would take the cream. Obviously, what's happened with COVID, we've obviously had to, in the pandemic, we actually had to reduce that optionality, reduce some of those faces, simplify the operation, smaller workforce, and say, instead of mining all these different faces, we're just going to mine 2 or 3. And that's fine until you obviously get some bad days. But now we basically are in a situation where we're hand to mouth and we eat what we kill. And sometimes when the grade goes down to 4 or 5 grams, well, that's it. That's what we've got. We can't suddenly go somewhere else and get 10 grams to compensate. So we're in that moment at the moment. But what can I say? Those ounces that we haven't been mining are still there in the mine and there for the future. So what we're doing now is we are rapidly accelerating our drilling. We're building up our development rates, and we'll be back to where we were planning to be in the first half of 2020 in 2021.
Okay, so I understand that. That makes sense to me. But just in that, so are you saying that you are starting drilling again now? You are starting to play catch up now. We've got everybody back. We've got it just about now. Since the end of September, we've just about got everything back, everyone back. Now, it's going to take, we're not going to turn this around in 5 minutes. We've got 9 months with no drilling. And, as I said to you earlier on, we've done a lot of things in the mine. We've really improved maintenance. We've put maintenance workshops underground. We've actually got fuel trucks and lubrication trucks going to the machines at the faces. So instead of the machines coming out of the mine for maintenance and refueling, it's all done at the face. So the effective hours of all these machines is gone up. So we're really poised to really be able to accelerate our development. So all we need to do now is rapidly drill to prioritize that development, and then we'll reap the rewards of this in early 2021. So the last quarter is going to be a period of ramping up our development. Our development's not been bad. It's not been as high as it needed to be, but we've done 3 consecutive months of over 1,000 meters a month, which is the best ever. So we're moving in the right direction, and I think that's going to grow more and really bode well for 2021. Okay, but playing catch up is going to take money. So what's the money situation?
Well, the irony in all of this, people are focusing on the ounces, and it's easy to say, well, yeah, you were on track to do 42,000 ounces for the year and you're only going to do like 33, 34. Yeah, but the margin on those has been pretty damn good. At the end of the day, let's look at Q3. We started Q3 with cash holdings of around $9.6 million. We have ended Q3 with cash holdings of over $11 million. So that's $1.4 million. But on top of that, we took out of that cash $2.6 million to pay Equinox for the final payments on Coringa. So the quarter, we've made over $4 million free cash flow. By far our best quarter ever. So despite we didn't. So cash flow wise, brilliant. So we've got the cash. We're sitting there with $11 million. We're paying off Equinox monthly, $1 million a month. By the end of the year, we'll only have $4 million left to pay to purchase Coringa. By the end of Q1, we'll have bought Coringa, all out of cash flow. And in the meantime, we've ramped up our production, we've ramped up our development. Hopefully, we're going to see recovery in production slowly. Okay, we're not going to have the spectacular year in 2020 like we predicted, but we'll probably have a much better year in terms of cash generation. And I think the consensus is that we're going to enjoy this economic tailwind in 2021 as well. So, okay, that it all bodes well for us to actually keep generating positive cash and not only fund those final payments on Equinox, but we can actually be pretty ambitious about our exploration aspirations as well.
Okay, so talk to me about. I can understand why you'd want to be measured in dollars rather than ounces because it looks positive, and that's obviously the state of the gold market, gold price at the moment. You'd expect that, but talk to me about this $11 million because if you're using the language of hey, we're going to play catch up here, we've got the cash to do it. How does that $11 million break down? Because you've got some more payments to make to Equinox. How much is left for the drilling component to play catch up, and how much is left for exploration to kind of see what else you've got around the mine?
Well, the drilling is kind of a bit mixed up because we've actually now got 5 rigs now. 5 rigs have just come back. 2 underground rigs, which are purely drilling in the mine, doing underground drilling, infill, and mine exploration. We've dedicated at the moment 2 of the surface rigs to mine step-out drilling again to help the mine plan for the next 3 to 5 months. And then we've got 1 exploration rig at the moment drilling in South Chico. So at the moment, most of the drilling, it's actually mine site drilling. But in about 2 to 3 months' time, we will we'll move one of those rigs from mine site into more pure exploration, looking for new targets. So at the moment, I mean, cash flow wise, we're going to be spending $1 million a month on the assumption we're generating about $1 million a month cash flow. That's almost going straight out the door to Equinox. And we're running down our cash ever so slightly or we will be on this increased exploration effort. It's probably going to be in the order of $500,000 a month on sort of regional stroke mine site exploration. So we'll be spending outside our operations probably about $1.5 million on Equinox, at Coringa and regional exploration, basically, more or less.
And with the Brazilian real decreasing in value, is that giving you more meters in terms of drilling? Has it got cheaper?
Big time. Every I mean, this is the cheapest drilling it's ever been. It's like 350 reais a meter, which is like $50-$60. It used to be 200. It's just it's incredible. It's brilliant. And we can do our own assaying in-house as well, which means we sample prep and assay, which is another big cost normally, and we do that as well. So it's great value at the moment. Great value.
So just to understand, because given that you're playing catch up and it's about getting ounces into the ore sorter, processed and sold, why spend money on exploration at this point?
Well, at the end of the day, you can't actually. From an underground mine itself, you cannot actually. I mean, we're probably limited to about 40,000 ounces anyway. We all know that. We're trying to fill in the gaps between this whole sort of how do we grow our company. We've almost got 3 scenarios. We've got Coringa, which is being permitted down the road. Permitting, outstanding permitting issues there to get through. Palito, process plant. When we get over this little mini pandemic hump and we get back to normal, plant constrained operation, need to know what we're going to do there. Does it justify more plant capacity? That's going to depend on the exploration success in and around Palito. Can we turn that exploration success into production ounces? Therefore, does it justify plant expansion at Palito? Then over to South Chico. Okay, another mine producing quite nicely. Tremendous potential to expand that. The question then will be, well, if are we going to continue trucking all that ore from South Chico? And if that doubles, are we going to continue trucking it all the way to Palito? Or should we actually expand, have a small production center there instead, which might stop us expanding the plant at Palito? Because if the Palito plant is suddenly liberated from our Chico feed, that plant's perfectly big enough. The only way we're going to answer these questions is by drill holes. We can sit here talking about that for the next 5 years. We won't know. So it's a competition for capital between these three areas in a way. And now, of course, you saw in our press release, we picked up these two areas called Fofoca and Sao Domingo. And those two, the Fofoca tenement really interests me because it's got quite a lot of artisanal activity on it, and those IP anomalies, those geophysical anomalies we're drilling at Sao Chico, run straight into that tenement. So that is a very exciting, very interesting tenement. Further to the west, we've got this one called Sao Domingos. Now, this one I love. I love this, and I wanted to get this tenement for a long time. It was offered to us a long time ago, outrageous money, couldn't afford it. It's come to us again. We bought it for peanuts. Got the tenements, the rights for peanuts. It's got today on it some really exceptional artisanal operations, some past, some present. Saw it with my own eyes. Grades looking really great. If that thing's got, it's a walk-up drill target. It really is. It doesn't. You just got to walk up and drill it, 4, 5, 10 holes, whatever. And we drill underneath that, and it's got any depth extent to it. That'll be a significant find for a company of our size, without doubt. So can't wait to drill it, and we will be. The guys are there as I speak, beginning to cut in roads and get ready to drill it. So that's if we get something there, that's going to be a real boost for us. So we're looking forward to that one, and I think it could bring some great news flow in the next months.
I mean, they're nice problems to have, Mike. Those are three quite nice choices to pick from. But in your mind, what would you be focused on? What makes most sense for you in terms of the allocation of capital? If you had to pick one,
got to go with confidence. So it's got to be Coringa right now. I mean, it's a 500,000 ounce resource there. The plant is there. We're well down the track with the permitting. We're well. This is becoming a very advanced project, getting ready to build. And at the end of the day, all the previous operators, they've not touched the sides there either. There's so much upside there as well. And we could go there and spend exploration dollars filling in all the gaps and looking for all the extensions, and that could be a very long-lived resource as well, an amplified production rate. All we know at the moment is there's enough there to start a very nice, profitable operation, and that is it. That's it. The other ones, at the end of the day, I know I wax lyrical about Tucano. I think it's absolutely fantastic, which you do, but it is at the moment still only a prospect. And to move it forward to be something more than that, we need some drilling first. But at this moment in time, Coringa's our number one priority. Okay.
So what would you say to people with regards to this release? I mean, you're painting a sort of a positive picture here, but production's down, the grade's down. I appreciate you got cash in the bank now, but what should people feel reading this?
Well, production's not down for some kind of problem with the ore body. The production is down for very clear reasons. We just haven't had the variety of workplaces. So that's nothing to worry about. That's going to bounce back. It might not bounce back immediately, but it'll bounce back. Confident, absolutely confident. We're drilling, we're starting, and so despite that, we've still got a very modest, satisfactory, reasonable level of production, which has made good money. Our cash position is better than we'd ever envisaged or anticipated, which is great. The exploration upside is really positive. I love these new acquisitions we've got. I'm really excited about them. I really am. I think they're going to be great. I really do. And LP at Coringa, I don't want to sound sort of, pessimistic, but I was amazed that these guys actually sat down and met in September. I just thought, they'll delay. No, they sat, met, and bang, gave us the LP, and it was just like completely out. We knew about a week before, and bang, then it happened, and we have the LP, which is fantastic. And so that now means that's the most important, difficult, hardest license to get, with all the stakeholders need to agree. It means we've got public support, huge, because the public support. If you haven't got public support, I've worked on enough projects where if you're fighting public support and you haven't got that, you're doomed. But we've got that. So that's happened, which means we can really drive on with Coringa. We're now with construction license and all the other stuff, which is pretty procedural. And we could be sitting here in sort of 6 months' time, ready to put the shovel in the ground.
Great stuff, Mike. Confident about Q4?
Much more confident about Q4, definitely.
Good man. Okay. Well, look, Mike, thanks for that. I mean, thanks for taking the call. I know you're probably exhausted from your, time in Brazil, even having just got back. But let us know how things are progressing. We'd like the story. We'd like to see how things are going in country, obviously. And any more news, just let us know. Okay.
Absolutely.